Hi friends, today we will learn about classification of accounts. Before we move to the classification of accounts, let's understand why do we need to classify the accounts. All the transactions which happen in a business has a dual effect of debit and credit. When we do a transaction, it can be in the nature of sales, purchase, payment of salary or purchase of any fixed assets. To understand it more clearly, let's take an example. Let's think we have a business of a stationery shop. We sold a book to a person. In return, he has given us some money. We can see two accounts is taking part in this transaction. One is sales and another one is cash. As we have studied earlier, every transaction has the dual effect of debit and credit. Then in this transaction also, one account must be getting debited and another account must be getting credited. But how to identify which account will be debited and which account will be credited? To know this answer, first we need to understand classification of accounts. In traditional approach, the accounts are divided into two broad categories. One is personal account and second one is impersonal account. Further, the impersonal account has two subcategories, real and nominal account. Let's start with the personal account. The word personal relates to the person. For example, Ram, Shyam, Geeta, Sunita, etc. Means accounts having name of person or human being. But personal account in accounting also includes artificial or legal person as well. Generally, in a company or any organizations, the decisions are made in the name of the company and not in the name of any human being. The law of our country consider the company or any organization as a person or call it as a legal person, and it has a separate legal identity. Here we will apply the golden rule of debit and credit. Debit the receiver and credit the giver. Let's understand with an example. If Ram has given money to Shyam, here the Ram will be credited as he is giving the money and Shyam will be debited as he is receiving the money. Now we will see the impersonal account. Account which are not personal in nature is called impersonal account. Subcategories of impersonal accounts are real account and nominal account. Here we have real account. Accounts which relates to assets or properties of an organization are called real account. Example, building, land, machine, copyright, etc. These are real accounts. Here we will apply the golden rule of debit and credit to the real account. Debit what comes in, credit what goes out. For example, if we are buying a building, then the building account will be debited, and if we are selling a machinery, then machine account will be credited. Now come to the nominal account. Nominal account are those which relates to income, expense, losses, gain, etc. like rent received, sales, interest received, or salary paid, rent paid, or profit on sale of machine or loss on sale of machine. We can conclude that all the accounts appearing in the profit and loss statements are in the nature of nominal account. Here we will apply the golden rule of debit and credit to the nominal account. Debit all the expenses and losses. For example, salary paid, rent paid, these are the expenses. It will be debited. Credit all the income and gain. For example, sales, interest received, these are the income of the company and these account will be credited.